All right, thank you for joining us today for our presentation. My name is Tia Sandoval. I'm a financial aid coordinator in the KUMC Student Financial Aid Office. So we're here to answer any and all questions you may have relating to financial aid or any other financial questions you may have that we can help address through our financial literacy program. Today we have Lee Modesitt, who is with us from the Kansas Insurance Department, where he is the Director of Government Relations and Public Affairs. So I will turn it over to Lee.
Perfect. Thanks for having me, Tia. Appreciate the opportunity to do this. Always good to be with folks and share what we do here at the department. I think a lot of times folks don't know we exist till we're ready till they have a major issue. So I appreciate the opportunity to talk a little bit, hopefully in a proactive manner. Thought I'd start just briefly talking about Commissioner Schmidt. So Commissioner Schmidt is one of 13 elected commissioners in the country. Most commissioners are appointed by their governor or some other process. She served as a pharmacist for over 40 years. She's a proud KU alum. Her husband's now a retired orthopedic surgeon. So we're very much familiar with the healthcare space, both from a practicing pharmacist as well as being married to a physician. And as part of our membership of the NAIC, so each state belongs to the National Association of Insurance Commissioners. Each one has committee assignments. So you can see from the slides here kind of the work that she does in those spaces. Up until recently, she actually served on the B committee, which dealt with health-related matters. And that's been replaced with the F committee, which deals with financial regulations, standards, and accreditation. I'll talk more about what that actually looks like and why that's important here in just a minute. And then she also serves on our National Insurance Producer Registry, or NIPR board. And that's kind of a nationwide consortium responsible for helping license agents in all 50 states. What does the insurance department do? So we serve three primary functions. I won't read them. Everybody's capable of reading, but those are the three things that we are tasked with doing. Folks that may not know, we also have securities division within our department. So broker dealers, investment advisors, those sorts of things fall under our jurisdiction as well. We have a securities commissioner that handles that side of the operation, but the functions are very similar in what we're tasked with doing. We're there to go make sure that broker dealers are complying with financial reporting requirements, that investment advisors are conducting themselves appropriately. We're responsible for licensing them, whether they any advisor who wants to do business in the state of Kansas, whether they be a Kansas resident or non-resident. And we help folks in both the insurance and security space if they run into issues, whether that be, on the insurance side, we see help with feeling like your claims aren't being paid on time, or maybe not according to the policy. And obviously on the security side, we tend to see complaints related to potential fraud. A couple of things we don't do. We do get these questions quite often. Folks wanting us to help them buy an insurance policy or to tell them which is the right policy for them. That's not something we do. We do make tools and resources available to kind of help consumers know what questions to ask. But the reason we license folks in this space is for them to do that work. Our responsibility is to ensure compliance with those laws and regulations, and again, make sure that we point you in the right direction to get those questions answered. I always like to start with an overview of insurance, recognizing that people come from this from different perspectives. Some have a better familiarity with this than others. So if this is too elementary, I apologize, but I do think it's important to know that insurance is not a savings account or a piggy bank. It's a tool for risk management, and it only works if more people pay in than get benefits out. So there's kind of two ways to look at it. You can always be frustrated that you spend a lot of money on premiums across all the different insurance product lines and rarely use them. Or you could look at the positive side of it, which is having that protection there in the event of a major loss, but feeling fortunate, that you didn't lose a home to a tornado or a wildfire, things like that. So there's, again, two ways to look at it. Kind of just depends on if you're a, glass half full or half empty person, but it really is a risk mitigation tool, not just for you individually, but, company structure in the same way. Again, if this is too elementary for some folks, I do apologize, but I want to make sure everybody's using the same terms and thinking about this in the same way. We see a lot of confusion around some of these key terms. So your premium is obviously the monthly payment, or quarterly, yearly, depending on how it's structured with your company, that you pay for that policy. The deductible really only comes into play, if you're going to pay a claim. Obviously, folks in the medical space are far more familiar with this. You're far more likely to encounter the deductible side of this compared to, say, home and auto, where you're only going to run into that if you're making a claim, and the chances of that are, significantly less than our standard day-to-day healthcare. And then policy riders are additional things that you can add beyond the minimum coverage requirements. And I'll talk about those here in just a few minutes. So this is kind of set up in three different tracks, if you will. First, we'll go over auto, then home/renters insurance, and then we'll wrap up with talking about medical malpractice. So here's a summary overview of the minimum required coverages in Kansas. These are established by state law. They're not a regulation by the insurance department. We're simply responsible for making sure that all policies filed to be offered in the state of Kansas have at least these minimum coverage requirements. Another thing I like to highlight on the auto sides, we see a lot of confusion around this. Kansas is a no-fault state. So folks hear that term and they think that means nobody has any liability. And that's not in insurance terms what no fault means. And it's really hard for us to wrap our heads around that as everyday consumers, because we think, well, if it's not my fault, then whose fault is it, sort of thing. And really what this is talking about actually has relevance to med students, and that's dealing with medical expenses, funeral expenses, lost wages, things like that. So the key point there is at the very end, passengers who own their own cars collect under their own policy first. And so that's all that no fault is discussing. It's not talking about, hey, there's a head-on collision and we couldn't determine who is at fault. Usually through accident reporting and things like that, you're able to determine if there was liability and whose liability, whose insurance should pay for that liability. Obviously, there's coverage beyond the minimum. Everybody, I think, is aware of that. When you look at what are those options, what does that look like? Here's kind of a little summary of the two kind of general tracks that you go with that. Collision obviously covers repairs. Comprehensive goes above and beyond damages from an actual accident. So the ones we see most common are going to be a windstorm causing a tree limb to fall on top of your vehicle, theft, those sorts of things. Certainly of late, wildfires may be relevant for some Kansans, unfortunately. So there's neither of these, again, a couple slides back talked about the minimum requirements. Neither of these are required by state law, but it is often required by a lender if you have a loan on your vehicle to have, when these are packaged together, what we call full coverage. So other things that you want to make sure that you at least are aware of your policy covering or not is going to be if you need a rental vehicle. I'm taking a trip next week. I'm going to rent a car. Does my coverage extend to that rental vehicle, or do I need policy offered by the company itself? Those are all questions that before you take a trip, before you rent a vehicle, or as you're buying your policy, knowing your type of lifestyle and your day-to-day behaviors, you want to ask those sorts of questions just to make sure that you're getting adequate coverage. We're all guilty, I think, of shopping first on price and then worrying second about what does that actually get me. These are the types of things that you want to be aware of when you're talking with your agent and thinking through the best coverage options for you. Here, Here's a slide I always like to include, and part of that's, I think, probably from my own experience. You don't know, you never plan on being in an accident, and then even working at the insurance department, you have that accident, your adrenaline and emotions are charged, and you kind of forget everything that you go out and talk to people about. So there's a couple of quick notes here. It's really important. Obviously, I think it's common sense to get the information from the other driver. Take photos if you can. And here's the key things that I really wanted to hone in on, because this is where we see a lot of consumer confusion and frustration. You've got to notify your company as soon as practical. So, obviously, if you have a medical emergency, those sorts of things impact that timeline. But if you're on, if it's a weekend incident, those sorts of things. But the general idea is, as soon as you can contact your agent, your company, do that. And one of the reasons for that is this second to last bullet point here, which is the company has 30 days from the date of notice of the accident to conduct that investigation. So we see folks may take a few days to actually go through the process of contacting their company to let them know that they've been in an accident, and then they get frustrated through the claims process. So that 30-day window gets started once you have actually let your company know, as opposed to from the date of the incident. And then the last point I wanted to mention is make sure you cooperate with your company. Again, as I mentioned earlier, this is a risk mitigation tool for everybody, and a company wants to make sure that their rates and the pool itself is properly protected. Unfortunately, there are a number of folks who try to defraud insurance companies, and that's a strategy, an investment strategy, a financial living strategy. And so companies have processes in place to make sure that you're telling them the truth, and to make sure that they're paying an appropriate claim. And one of the things that will often happen is your carrier and the carrier of the other individual, if it's a two person or more accident, you'll have to tell the same story 3 or 4 times, and that gets incredibly frustrating, because you just want your car fixed, you just want things taken care of, but that's really, again, designed to make sure that the claim's legitimate, and that they're not unnecessarily paying out fraudulent claims, which obviously raises rates for everyone. Switching gears a little bit to homeowner policies. So recognizing that students are probably in one or two, either own a home or will rent for a period of time. Trying to touch on both of these depending on where you're at in your life journey. On the homeowner side, for most folks, your home is going to be your single largest investment. So it doesn't matter whether you're at the low end of the income ladder or the upper end of the income ladder. A lot of these things scale, and so what we try to encourage folks to do is have the best coverage for what you can afford. You don't want to be in a position where you buy more insurance. So I always like to say, you don't want to be insurance rich and cash poor, and conversely, you don't want to be cash rich and insurance poor, because you got to think about this in the holistic financial picture of making sure that you have sufficient coverage and sufficient protection for yourself in the event of an accident. Again, I know it's really frustrating for us to spend the amount of money that we do spend on our insurance premiums, and thinking, well, why don't I get any of that back? But if you own a home and your home's totaled through a tornado, suddenly you're thankful that your $1,000 to $2,000 a year premium rebuilds your house for a couple $100,000. Suddenly that return on investment doesn't look so bad. But it's really hard for us to keep that in mind as we write that check each year. Another thing that you want to be mindful of, especially in markets like this where building costs are soaring, your house is only going to rise in value as a general rule. And so you want to make sure that as the longer you own a property or the more improvements that you make to it, that you're checking in with your agent just to make sure that you have sufficient coverage, again, in the event of loss. Here's kind of the 3 basic structures of a homeowner policy. You're going to have your primary structure, your living unit or dwelling coverage. So a lot of folks will have a little storage shed, things like that, detached garages, and then contents. This is where we see folks get caught up in not they have more contents than they realize. So policy, you can add content coverage above and beyond kind of the base policy. It's all going to depend on how much stuff you have and how much you want to replace out of pocket, should you have theft or fire or tornado, any type of major event. And that really is a conversation that you have to answer for yourself with your agent, because you can have a lot of stuff, and if you're not particularly attached to it, something happens, you're okay with it being gone and not replaced, then fine. But a lot of times we want to make sure that we can get all of our stuff back, and ideally at the same condition or better. As you think about, and a lot of this is difficult because you have to put yourself in a position and envision what happens if I were to endorse some sort of tragic event. Another thing to consider is, what's the likelihood of being displaced? What kind of savings do you have if you're displaced? Can you shift that, while your property is being repaired? This is additional coverage that you can add. And again, it's kind of specific to you, your circumstance, where you're living, and your preferences. So there's no wrong or right answer here. It really just depends on which mixture of things are important to you and how much you want to spend. Another couple of things I want to touch on just real quick. And again, I'll try to keep the overview pretty high level. The biggest thing I want folks to take away from this presentation is that we are here and we make ourselves available, and if you have questions, to call. There are additional protections above and beyond. Again, that kind of base home policy. Personal liability protection for your home is pretty common, particularly if you've got obviously med students are going to have be higher income earners upon graduation, generally going to have higher debt as well, unfortunately. But there's a tendency for folks to not, most folks are not this way, but there's always going to be that percentage of the population that they see money and they want to try and take advantage of the situation. So one way to protect yourself and protect insolvency or somebody suing you and thinking, oh, they're a doctor, they've got a lot of money, is to make sure that you have personal liability protection above and beyond. So that's something based on your circumstances that you might want to talk to your agent about and consider as well. And then a couple other things that we see quite often. Again, insurance is a very price sensitive product. So we tend to buy on cheap, not on value. And so where you're going to be able to lower your monthly premium cost is going to be in deciding to go with an actual cash value versus a replacement. And that means a monthly premium that is lower. But what that also means is in the event of loss, you're going to have to come out of pocket significantly more. So even on your personal items, there's an assumption of depreciation, that there's only a certain time period of usage of life of an item, whatever that item is. Where we see the biggest disagreement and expense obviously is going to be in roofs. A roof very quickly depreciates over time. And, if you have a house that the roof's 15, 20 years old on, and it's a 30-year shingle, if your roof's $10,000 to replace, well, obviously you're eating a much larger chunk of that bill, or coming out of pocket for a much larger chunk of that bill than if you had, say, full replacement, where that $10,000 roof might be subject to your $1,000 deductible, and now the insurance company is picking up the remaining $9,000. Again, there's no right or wrong answer here. It really just depends on you and your unique situation of how you're trying to make this fit into your overall financial picture. And then lastly, the thing on the home side that I always, and this is true whether we're talking homeowners or renters, it's really important to have a home inventory or apartment inventory. If you're living in an apartment, basically make sure that you have a way to prove to your insurance company that you had items in your possession. One of the most difficult conversations to have with a consumer, and this has happened in the last 6 months. We've had folks who lost everything in a wildfire. Literally not the whole house is burned down, the stones burned to dust, the whole 9 yards. And the company said, "Hey, we need to know what you had inside the house. Can you document that for us?" And at first you think, well, that sounds ridiculous. But again, recognizing that the insurance company has a responsibility to all policyholders to ensure valid claims. They're looking at it from the perspective of, you can't tell us you have $100,000 in personal possessions without providing documentation, or 10,000, or whatever the number is, right? They want to make sure that if they pay that policy, that there's verification that it exists. So with the cloud, with phones, all of those sorts of things, it's really easy to take photos and even in the event of loss, have access to them in another place. So that's something to keep in mind. It's a common pitfall that we see. If you are able to keep receipts along with that, that also helps as well. A couple of other things we see on the home side, and then I'll touch next briefly on the renter side. Flood insurance, obviously, if you're in a floodplain, when you buy a house, you're going to be required to purchase it. Outside of that, most people don't. Where you can really run into trouble with that is that if you have in particular, if you have a basement and your water comes up through the groundwater rises from significant rains. If you don't have flood insurance, that's not going to be covered under a standard homeowner's policy. Your claim's going to be denied. You might be out, depending on the size of your house, you could be out anywhere from $5,000 to $25,000, or more, just in damages related to water extraction, trying to repair sheetrock, trim, all those sorts of things. Now there is a way to kind of mitigate against that a little bit, in that if you have a sump pump in your basement, the sewer backup / mechanical failure that we talk about, that's a good way to make sure that if there is water coming into your basement, it gets back outside quickly. If your sump pump's not able to keep up, then that sewer backup or mechanical failure could kick in potentially, depending on a number of other factors. But those are the two types of things you want to look for, particularly if you have a basement. And then earthquake insurance is something that we're seeing more and more Kansans at least have an interest in, as we see that start to tick up in certain parts of the state. Renter's insurance, quick summary here. I think a lot of property owners require renter's insurance, but even if they don't, this is a relatively inexpensive product to have that protects you, particularly your personal items, from theft or damage. If you have roommates or a sprinkler system in a sprinkler system for some reason gets set off, and ruins all of your stuff, renter's insurance is going to be helpful in getting your stuff put, back to normal and replaced. So it's again relatively inexpensive. If you have a car, you can usually add that with your auto and get a multi-discount, and you be towards the lower end of that price point there. But again, can't recommend any of these products, of one being better than another. Just it's important to have those conversations with your agent. There are certain minimum requirements in Kansas, but from there, it really does depend on what's the best fit for you. And then lastly, I wanted to talk about medical malpractice. I think this is probably the one that is going to feel like it's the most relevant to where you all are headed in the future. Kansas does have a $1 million coverage requirement to practice medicine. We also have a unique public-private partnership that makes the market available. And so the first half's available through private insurance, and then the second half's available through the state of Kansas through the Healthcare Stabilization Fund. And as you can see here, I highlight this unique partnership as the primary reason why Kansas is top 10 states to practice medicine. So I don't know where students are planning to be post-graduation, but certainly would encourage them to look at staying in the state of Kansas. This is one of those products that, as you go out into the professional space, if you're part of a clinic or a hospital, this is going to be purchased on your behalf. So, this is more of just a summary or an overview to be aware of, that this is what takes place in the market. Unless you plan to start your own independent practice, this is less relevant from a how does this actually work in practice, because you won't have to purchase it yourself, but it'll be purchased on your behalf. A couple of things as you think about your job offers, and where you may end up wanting to be. Again, if you're in Kansas, everybody has to have this coverage amount, but the companies that offer MedMal and the providers who purchase it, there's additional kind of ancillary benefits that each carrier offers. As I was talking to some folks in this space, they said, hey, there are every year there's a ranking of the top 3 claims, if you will, in the health space, and the number one that's included every single year. The other 2 change, but failure to diagnose is the one that is most often claimed against for medical malpractice. And what I didn't realize is that a lot of times in insurance and in general, attorneys like to settle cases. They don't want to litigate. It's expensive. If we can just settle this and move on, then everybody feels like they won a little and lost a little, and let's go on down the road. But what's important, particularly for physicians to understand, is that when a med-mal case happens, the reason you want to work with a carrier that's going to, for lack of a better term, defend your honor, defend your reputation, is that there's an element related to licensing and the Board of Healing Arts for any sort of medical malpractice case. And so, you want to, as you're having those conversations with potential employers, you want to understand, what does that insurance look like? What are the benefits that insurance carrier offers the practice? Because you want to make sure that you're working with somebody who is going to defend your medicine, who is going to seek to protect you. And there's also companies that offer benefits around how, risk mitigation. What are the steps you can do to make sure that you lower your opportunity for claims? Another thing that I think is somewhat interesting, to me at least, about med-mal is that the $1 million is a minimum coverage requirement. And just as I talked about with home and auto, there's minimum coverages, whether it be by state law or by lender. But a lot of times we go above and beyond the minimum coverage. And it's my understanding that it's the $1 million in coverage in Kansas. It's pretty uncommon, actually, to go above and beyond that coverage. Hospitals or clinic settings may have a broader group limit, but each individual physician's typically looking at that $1 million in coverage. And to elaborate just briefly a little bit more on that public-private partnership, up until this past legislative session, the private market was required to purchase the first $250,000 in coverage, and the stabilization fund, which is still paid for by physicians, but it's again administered by the state, picked up the other $750,000 in liability. And so legislature passed a bill, not in the session we're in, but the previous session, that equalized those out as a $500,000 in coverage each. So again, it's not something you have to, worry about from a, I've got to go purchase this myself, but it is something to be aware of that's relevant to the profession, and something to keep in mind as you explore potential offers down the road. A couple other things that I and then take questions if there are any. We do make a lot of resources available. We have shopper's guides that range from home and auto to renter's insurance. We have, if you have parents, grandparents who are Medicare eligible, we have a lot of information on Medicare supplement. There are insurance products that don't fall within our jurisdiction, whether they be self-funded employer plans, any sort of government backed insurance, Medicare, Medicaid, those sorts of things. They don't fall in our wheelhouse, but our consumer assistance division really prides itself on, insurance is confusing. So just call us, and if it's not us, we'll get you to the right place. That's what we're here for. It's incredibly frustrating. Even folks who work here, dealing with insurance and trying to get figure out where you're supposed to go and who you're supposed to connect with for help. And so if you take nothing away from the presentation today, both now, as an individual and as you go out and into your professional space, when folks are frustrated with insurance and they don't know where to turn, that's what we're here for as a regulator. That's what we're supposed to do by statute, and we're always happy to help. So we do have live chat. So again, I know it's not always easy to step away for a 20-minute phone call, but you can easily send us a note there, email or phone. And then for folks who have to either fax or mail in, we still can do it the quote unquote old fashioned way, but try to make ourselves available in as many locations as we possibly can. And that's what we're here for, and always happy to help. And I appreciate you all attending today.
Great. Thank you, Lee. That was a lot of really good information and things to think about. I know there are things that I hadn't thought about originally, so I'll definitely have to keep a lot of that in mind. Looks like we have Samuel here. Samuel, do you have any questions for us?
I know. Thank you. I'm new to the system, so I kind of enjoyed listening to the talk. So one thing I wanted to ask is like the medical, the professional liability insurance as a practitioner. I'm a physical therapist by profession. So is it only offered by the organization, or can individual also take one? Because I approached one of my agents and he did not have any information on professional liability insurance, and I also have no clue. So
no, that's a great question. So I actually asked that yesterday of some folks, kind of curious myself. And you can, as an individual, purchase additional coverage beyond what your employer is purchasing for you. Most carriers are going to require that if you're going to purchase it, it has to be through whoever's already writing the group. But I was told that it's very, very uncommon for folks to do that. Generally speaking, the group policy has been sufficient from a coverage standpoint, which was something I didn't realize before. Again, I hear $1 million and I think that's a lot of money, and then I also see some of the cases that come forward, and I think, well, $1 million doesn't go very far in some of these more challenging cases. But as I understand it, and talking to folks who only do med mal, it's pretty uncommon for folks to go above and beyond what's already picked up by their employer.
Yeah. My case is a little different. I'm a graduate student and an international student, so I'm looking to apply for my license to hold it for now. But what a clause for having licenses to have a professional liability insurance, and I don't have any employer, so I'm just thinking how to go about this in meeting the insurance requirement to hold a license.
So I'm not in the space of writing it, but what I will do is I will put my email here in the chat, and if you send me a note, I can get that to folks who are, and have them reach out to you and see, again, whether it's them or that certainly they would know if it's not something they write, they would know where to direct you to. So be happy to do that.
All right. Yeah. Thank you so much. Yeah.
Sure.
I have not an email yet.
Yep.
Thanks.
Great. So you said if students have questions, they can call, chat, email, and then is your website pretty user-friendly and have a lot of those resources on there as well listed?
It does. Yep. Okay. So we have a whole section dedicated to consumers, kind of based on product line, and each one of those products has a guide of here's the questions you should think about and the questions you should ask, and here's what they mean. It's something nobody likes, the purchasing of insurance, right? So we try to just say, I want to get this done and over with. But if you're interested in kind of diving in and saying, okay, am I really getting the best for me and my needs? We try to provide as many unbiased resources as possible, so folks feel like they've got the right information, to ask good questions.
Okay. Great. Well, if any other students email us any questions or anything like that, I'll direct them to our presentation today, and then as well as share the contact information for the Kansas Insurance Department.
Perfect. Perfect. Well,
Yes,
thank you for the
thank you.
opportunity. I appreciate it.
Of course. Thank you as well.
Have a good rest of the day.
You too. Thank you.
Thanks. Bye.